quite bad out there on the markets.
Yeah, absolutely. I think it's the first time around I've seen the markets like this since last year, March. You know, we saw some really negative numbers. So this is quite nice to see some negative numbers out of the market again. I was becoming a little concerned with all the positive numbers we were seeing, and it's quite nice to start seeing some volatility again in the market. And you can see I'm smiling because with that obviously comes buying opportunity. You know,
about to say.
You know, another 5 days like this, which I don't think will happen. You know, it never happens that way. But you know, another 5 days like this, markets are nicely down again, and you've got more opportunity to buy.
What are you going to be going out there and buying?
Well, you know, you look. I mean, what viewers have to be cognizant of is that the issues in Greece and the issues that are now spreading to Portugal, all this is sentiment issues. Okay, so it'll make a difference to the European Union. It'll make a difference to funding and all those kind of things. But the robustness of the German economy is not necessarily influenced by this. The robustness that's being built at the moment in the British economy is not necessarily going to be influenced what happens in Greece. This is all sentiment that we're talking about at this stage. And if you're talking about sentiment moves markets, and that's basically what you're seeing at the moment. I mean, to give you an indication here, the Greek 2-year note at the moment has blown out now and is now sitting at a yield of 18.7%. Now, to give you an indication here, the South African market at the moment, long-term average equity market returns is about 16% per annum. So you're buying a money market instrument and you're locking your money up for 2 years in Greece and you're getting 18%. Now that's 2% beyond what you can make in the equity market in South Africa. And that's comparing to asset classes which are completely different. And that means that the bond market in Greece at the moment is pricing like an equity market. It's behaving like an equity market because of obviously of the uncertainty there. And obviously there must be buying opportunity in those countries at this stage.
Looking at Greece, they asked for that 14 billion euro loan. The question at this stage is not if they'll get it, when will they get this loan?
Well, that's not being supplemented by an IMF loan, of another 10 billion euros. And that's what all this hype is about at this stage, is the fact that they've asked for another 10 billion euros and the fact that there's now an amount that's required over and above what they've asked before is obviously now putting the proverbial spanner in the works, and that's why you're seeing markets reacting the way they do. If you look at comments from Jean-Claude Trichet and so forth, you'll see that he's talking about that. For Greece to default is not an option inside the European Union. We're talking about sovereignty here. We're talking about the second biggest trading hub in the world. We're talking about a very large portion of the world economy. We're talking about the European Union. And that's not necessarily, the sovereignty of that has to be protected. And that's what Jean-Claude Trichet is really talking about.
I mean, Greece, what does it need to do in terms of cutting its deficit? Because Angela Merkel says she won't give out aid to Greece unless they put in some more cutting measures in place. What does Greece need to do?
Well, at the moment there's a short-term funding issue in Greece. That means they're trying to repay short-term debts, and then I'm talking about a wide variety of debts. We're not just talking about it from inside the government, but they're trying to repay a wide variety of debts, and they need the liquidity in order to do so. And that's why these loans are so important. Really, what needs to happen in Greece is there needs to be a complete reform. From a governmental reform, and I'm talking about how they spend money, from a treasury perspective, how they run their economy. Much of what you're seeing in Greece at the moment is not something that if you ask somebody 10 years ago, do you think something like this could happen in Greece? Probably people would say to you, that's that seems unheard of. This kind of thing happens in Africa. It's not something that happens in Greece, and that's why this thing is at the end of the day is so astounding.
If we move away from Greece and going to the US, consumers are becoming more and more upbeat about the economic recovery, particularly in the labor market. The consumer confidence index numbers edged up to 57.2 in April. What is your take on the consumer there?
I mean, consumer confidence is, again, a sentimental feeling. It's how do you, people come to you and say, how do you feel about the world? How do you feel about the economy? Do you think that things are looking upbeat? Yes, I do. And it's a tick mark on the upside rather than the downside. And remember that we often sentimental about things, or we get feelings about things because of our very near-term type experiences. So if things have been really bad, then our near-term experiences are really, really bad as well. And invariably, that's when the buying opportunity is. So when consumer confidence numbers start rising, it means that the economy is rising with it. And hence, obviously, the buying opportunity obviously goes with that as well. But it's good that the consumer is feeling, more upbeat. It's being substantiated by GDP numbers, which will be out on Friday, which should be on the higher side. It's again substantiated by home sales, which are increasing and so forth. So there's a lot of turnaround in the US economy. As a matter of fact, where Greece is now is where the US was 12, 16, 18 months ago,
A growth rate of 3.3% in the first quarter for the US. Will that be attainable?
I mean, it's a big number. It's a big number for the US, but remember they're coming off a very low base. Look at home sales that were out last week. Home sales year on year, increased by 8%, and month was up something like 28%. That's a huge, huge number. So I'm talking now about new home sales. That's a very, very large increase, and because they're coming off such a low base, it's very possible the GDP could do something like that. And you're probably going to see those kind of very big jump, these numbers that jump very, very by much. You're going to probably see going through into the British economy and going into the European economies as well at some point.